So, good evening to all the joinees. Hi, this is Niketan. So, I welcome you all for the NGEN Markets webinar. So, meanwhile, others join, we'll take a look to the today's webinar topic. So, our today's webinar topic is analyzing risk parameters for mutual funds, in which we'll be covering these three tabs, which is value at risk and capture ratios, risk versus return scatter plot, and understanding rolling returns and drawdown analysis. And at the last, we'll be having a topic related Q&A. So we'll start. So as you can see, we have logged into NGEN Markets, and this is the landing page, Markets tab. So to analyze the mutual funds, we'll go to Funds tab, where we have the Screener tab. So basically in Screener tab, here you're able to screen the mutual funds. So here we have two options. You can either filter this on basis of their AMC, or you can also filter them basis of their categories. So if we click on this filter categories, so here we have provided the different asset class, and below there you can see their respective SEBI category classifications. So from here you can select multiple categories also. So there is no restriction for selecting the SEBI categories. But now for this, we'll be selecting this mid cap category. So as you can see, it is showing you mid cap funds, total 33 funds. And once we close this window, so now you can see all the 33 results have been shown up. So to, like, if you want to narrow down this list further, we have filter parameter options also. So you can either use this minimum AUM option. So like, let's say if I'm putting up a minimum AUM of, let's say, 5,000 CR, and also minimum age, like let's say 5 years. And once we apply, click on this apply button. So now you can see it has been narrowed down to 11 results. So here, as you can see in this list, here we have all these column options. So if you want to see the specific risk parameters, so in this preset column views, if you click here, we have this risk columns option. So once you click here, so now you can see there are the specific risk parameter columns which you can see here. And also note all the column views which you are seeing here. So the information here is since inception. So as you can see here, you are able to see the standard deviation, which is their volatility. Then you can also see their value at risk. So basically, value at risk tells you the value which is at risk of loss on basis of its percentage of confidence interval. So as you can see, for example, HSBC Midcap Fund, it's since inception VER, which is a short form. Uh, so the abbreviation is value at risk, is showing us 28.57 percentage negative. So as you can see that here we have not given a mention of the confidence interval, but as you can see by default it is here shown as 95 percentage. So to get an detailed information for this value at risk, so you can also open up a single fund analysis. So let's say if we click here on this HSBC mid cap fund, so this will open up the single fund analysis page where you can see the details for this fund. So like basic details like its ISIN and AMFI code, then what's its SEBI classification, then you can also see its respective benchmark. And as you can see, like previously in the screen tab, there was no option to select a date option. But here we have given this feature to select your start date, through which you can select your own time period. So let's say if we click here on this change button, and now you can see there is an option like here you can select your own customized date, or if you also want to see it for since inception. So let's say if we click on this since inception, so now you can see the information here will be shown on the inception databases. So if I below scroll here, you can see there are all these various parameters. So first you can see there are these two VR. First one which is historical value at risk, and second one which is implied value at risk. So basically, the difference between these two VR is like for historical, we are using historical returns, and in implied, we are using volatility. So basically, as you can see, that in this we are taking a confidence interval. So like let's say with an confidence interval of 95 percentage, there are 5% chances. So how we come upon this 5%? So we basically just took 100 minus 95, and we arrived on this 5% chance. So like let's say if history was again to be repeated, so these are the percentage of chances that a fund would be expecting the loss. So for fund, it is of negative 28.90 percentage, and for benchmark, it is negative 32.73 percentage. So Basically, as you can see for this historical VR, if I click on this question mark, so you can see it is on the basis of the historical returns. And similarly, if we see this for the implied VR, this is on the basis of the historical volatility. And also, as you can see for volatility, here we also have annual volatility, in which you can check like whether what was the standard deviation of our portfolio against the benchmark. So as you can see for our portfolio, it is 19.22 percentage, and for benchmark, it is 20.66 percentage. And also, let's say if you want to compare this volatility of this scheme with its peer, so what you can do, you can also compare these schemes with their peers by using the compare tab. So what you can do, we can again go back to NGEN Markets, and here in this list, on the extreme left hand side, you can see a weight like icon through which you can transfer all the desired funds to the compare tab. So if you just click on one of these two, three funds, okay, so I have clicked on HSBC, ICICI Pru, and HDFC Midcap Fund. So if I go to compare tab, so now these funds have been loaded here, and you can do their comparison with their respective benchmarks also. But let's say if you again go back to funds tab, and let's say if you want to load the whole list of the total 19 schemes which I'm seeing here. So here we have an option which is add top 50 to compare. So with a one click, as you can see, all the funds will be loaded to the compare tab, where you can do comparison for all these schemes with their respective benchmark. So as we have loaded all these schemes, I'll also just add the respective benchmark. In this add other items, we have the search benchmarks box. So here you have to just type the respective index, which is Nifty Midcap 150. And once it has been added here, so now you can see it is shown up in this blue row, in the blue color. And now, as you can see, all the information here in this green color columns. So this is also there since inception information. But here we have given a feature which is in this returns column. So let's say if you want to add up your own start date. So just click here on this settings wheel icon, where you can set up your own start date. So let's say if you wanted to do a comparison of previous 5 years. So I am selecting a date which is of 17th of June 2021. And then if you click on go, so now you can see all the information here is for that specific time period which you are seeing here. And now you can select, see this all these parameters for a specific time period which I selected here. So like let's say if you wanted to see for the VR, so if I just sort it here, so now you can see for quant mid cap fund it was having the highest VR which was of negative 30 percentage. So basically what we are saying here, so the VR here is higher than the index. So what we say, like the VR should be low as possible. And also if you want to sort this data on basis of other parameters, you can also click on the basis of standard deviation. So from here you can get an information like whether which schemes were having a lower standard deviation, or if you again click here, you can just sort it from highest to lowest also. So here you will be able to get that information. And then we also have this other parameters, risk parameter, which is Sharpe ratio. So in Sharpe ratio, if I just sort it here, you can see it basically tells you about the risk adjusted returns about the scheme. So like whether for the how much returns were the schemes given, where like how much returns were the schemes given on the basis of the risk it was taking. On the basis of Sharpe ratio, here you can see, and also as we see, higher the Sharpe ratio, better it is. And the other one, which is Sortino ratio. So here in Sortino ratio, here we are only taking in consideration of the downside risk of the schemes. And also in this, we say like better the Sortino ratio, better it is. So since we have seen all this information for the returns information, now if you want to check the relative returns for these schemes, so we just further scroll here to the right hand side, where you can see this purple color coded columns, where you are able to see like the current data is not activated. So if you want to see this data, you can see on the top left here we have this relative returns. Just click here on this checkbox, and now the data will be activated here. And here you have to take in consideration for two parameters. First one which is for benchmark, and second one which is start date. So as you can see, by default we have selected Nifty 50 as a benchmark. But if you want to do a fair comparison for this, you can change the index to let's say mid cap 150, and also the start date. So we'll be taking the same date which we had taken for the returns column, so that we can do a fair comparison for this related returns. So if we just check here the date, which is 17 June 2021. So now I will be changing this date to the similar date. And now you can see as the data has been shown up here. So here you can also see some parameters here like the beta. So let's say if I just sort it here. So now you can see for the beta for the index is showing up as 1. And as you can see, like the beta tells you like whether what is the riskiness of the schemes against the benchmark. So as you can see, ICICI Pru here is having the highest beta, which is of around 0.95, but it is not more than the index. So we can tell like HDFC, like the ICICI Pru Mid Cap Fund is the most riskiest scheme in this list, but not as much riskier as the beta. And also we have these other parameters, which is market capture ratio, similarly up capture ratio and down capture ratio. So in this up capture ratio, here you are able to know like whether how the fund was performing when the benchmark was in a bull run. And also in down capture ratio, here you are able to know like whether how the schemes were performing when the benchmark was in a bear trend. So if you want to see a more detailed information for the specific up capture and down capture ratio, we can again go back to this single fund. So let's say if we load back again this single fund here, and now you can see below here we also have this up capture ratio and down capture ratio column. So here you can see a detailed information for this. So like if you want to check how we calculated this specific up capture ratio. So if we just click here on this eye icon, so in this, we have taken in consideration for all the positive benchmark months, irrespective of the portfolio, whether it was giving us negative or positive returns. We have took all the positive benchmark returns, and then we have took a CAGR of all both of these asset and benchmark returns, and then we have divided the asset returns with its benchmark returns, and then we have arrived on this up capture ratio, which is 91.66. Okay, and in up capture ratio we say like higher the up capture ratio better it is, and in down capture ratio if you also want to see the similar calculation, just click here on this eye icon. And in down capture ratio what we have done, we have took all the negative returns which were the month on month negative returns given by the benchmark. We have took all those irrespective of the portfolio whether it was giving us positive or negative returns, and then we have done the same. We have took the CAGR for the asset and benchmark, and again we have divided the asset returns with its benchmark returns, and then we have arrived on this down capture ratio, which is 89.19. So basically what we say in down capture ratio, like lower the down capture ratio better it is. And then we'll be seeing the other tabs. So once we have completed all these relative returns, you can also check for the rolling returns. So here if you click here on this rolling returns tab, so just wait a second, it will be generating the rolling returns. So now you can see here we have an option for selecting the rolling returns window. So like for which time period you want to select the holding period. So basically if you click on this drop down box, we have given these options like from 1 year till 5 years. And as you can see in the bracket, it is denoting us 260 days, because here in angel markets, we only take in consideration for the working days, which is 260 days for 1 year. And let's say if you want to use it for multiple, you can also select any specific rolling window, like let's say if we select this 2 years, and then you can also select the start and end date for which time period you want to see this rolling return analysis, and then just simply click on this run button. So once you have clicked on this run button, it will be calculating the rolling returns, and now you can see the information for this. And as you can see in this graph, here we are showing you all the daily rolling returns, and we are showing you the average for this rolling returns time period, which you are seeing here. Like let's say for example, HSBC Mid Cap Fund. So for the time period, which was from 2019 to 2026, it had generated a average rolling return of 22.08 percentage. Then the wall, which was denoting the volatility. Then you can see the highest return and the lowest return within this time period. And at the last, which at the second last, which is the range, which basically tells you the swing between the high and lowest return. And then at the last, which is the positive percentage, which basically tells you uh, like for what time, so like for how many time periods it was giving you a positive returns in this time period, for how many times. So basically, as you can see, if you also want to check the similar rolling returns for a single fund, So you can again go back to single funds here, and as you can see here we have a dedicated rolling tab also, where you can see these rolling returns for three different time periods simultaneously. Like as you can see, 260 days, 520, and 780 days. And these rolling windows are fully customizable. So like let's say instead of 780 days, you wanted to see it for 4 years time period. So we can just change it to the multiple of 1040, and then if we just click on this run button, so now this will be showing you for the 4 years time period rolling returns. And besides here, we have this option to select like on which methodology you want to see these returns. Like if you want to see it on absolute basis or annualized basis. So let's say if we change it to annualized, so now we can see the side by side comparison for all these rolling returns, like whether what were the average rolling returns for 260 days time period, 520 and 1040 days. And also in this graph, we have denoted the color coding scheme. Like for 260 days rolling return, we have a blue color coding. Then for 520 days, it is a black color. And for uh, 1040 days, it is shown as green color. So let's say if you only want to check it for the 4 years time period rolling returns. So what you can do, you can just click on this 260 and 520, and now you're able to see in detail for the 4 years time period rolling window. So you can just select any specific time period which you want, and then you can also zoom into this specific graph also. So this was for the single rolling returns. Then we'll go back again to the main tab, in which we'll be seeing the next tab, which is drawdowns. So here in drawdowns, basically here you are able to see all the losses which had occurred for the schemes and how quickly were the schemes recovering from that specific losses. So as you can see in this, we have shown you the worst five drawdowns for all the schemes, in which we have shown the size, like whether what was the extent of that specific loss, then the length for how many days the drawdown was occurring, and recovery. So how much days this scheme took to recover from the specific losses. So if you click on any of the specific tab, so like let's say if I click on the recovery, so I can just sort this information for lowest to highest or highest to lowest. So basically from here you can get an information for which specific scheme was recovering faster in the specific list. And also if you want to take a detailed view information for this specific drawdown, just click here on this detailed graph icon, where we are showing you a graph information. So as you can see, we are showing you the starting NAV for that specific drawdown, then what was the ending NAV when the drawdown ended, and also the length for that drawdown and the recovery days. And then you can also see the recovery date. So like at which date the drawdown had, the fund had recovered from the specific loss. And also, as you can see in this graphical representation, here we are showing you some gray shaded portion areas, which are basically showing you the drawdown period. And the white portion here is showing you the recovery phase. So if you also want to zoom into this specific graph, you can just select and drag it from here, and you can get a zoomed version for this specific drawdown also. So this was for the comparison tab. And also if you want to check it for any single fund, you can again go back to the single fund page, and here we have a dedicated tab for the same. Like if you click on this drawdowns tab, here you can see the similar. Like here we have provided the details for the top 10 drawdowns, and here you can get all the information. And similarly we have also provided a graph for this, in which you can see the gray shaded portion areas which are representing the drawdown period. And moving forward to the next tab, which is the risk return tab. So here in risk versus return tab, here you are basically able to know like whether what are the risk versus returns of the schemes which are plotted in this scatter plot. So basically this scatter plot here shows you, on the x-axis is showing you the annualized risk, which is the standard deviation, and y-axis here is showing you the annualized return. And as you can see here, you are able to select your own time period for which you want to see the risk versus return analysis. So let's say if you want to change the time period, you can do the same. Like let's say if we change it to previous 5 years, and now you can see the plotting for that specific time period also. And as you can see, we have shown you four different quadrants. Like on the left hand side, you can see low risk, high return. Below here is the low risk, low return. And then on the right hand side, it is showing us high risk, high return quadrant. And below here is the high risk, low return. So basically, what we say from the x-axis, so like the schemes which are plotted to the left hand side, these are these are having less risk. then the schemes which are plotted to the right hand side which are having a higher risk, and also for the y-axis what we say, the schemes which are plotted to the top side, these are having a higher returns than the bottom schemes which are having a lower return. So let's say for example if I hover on this SBI mid cap fund, so it is plotted into the low risk low return quadrant, which is showing us like it had generated a return of 13.78 percentage, and it had given us a return of 15.10 percentage. But similarly if we also see the same for Motilal Oswal, so this was in the high risk high return quadrant, and as you can see the risk it had generated was 16.85 percentage, and you can see the returns it had given was of 21.01 percentage. And similarly in this risk return scatter plot, you can also see that we have plotted the index also here. So if you want to plot the risk return for your index also, you can do the same. And also as you can see this risk versus return scatter plot, you can also view the same in any portfolio also. So let's say if we go to any portfolio, and if I'm just loading an example portfolio, and here we are also having this similar tab. So like let's say if you want to check the similar risk versus return scatter plot in the portfolio, so you can do the same, and also you can change the time periods also. So let's say if you are taking this for a specific time period, and if we just click on run button, so now you can see that here in this scatter plot we have also provided an additional icons. So like the briefcase, which is a red color briefcase icon, which is showing you the overall risk return for your portfolio, and the home icon which is showing you for your respective benchmark. So if you just click on the show chart icons, you will be also able to know like whether which schemes were there. Through the names, you will be able to know the same information. And also in the portfolios tab, we have provided the rolling returns information also. Similarly, if you want to check the same for an overall portfolio, we have given this three separate rolling return windows time period. Like you can see it for 260, 520, and 780. And similarly, you can also change the rolling windows also here. So like let's say if I again change it to 4 years time period and change the methodology to annualized and just click on the run button. So now you can see a side by side comparison for the rolling returns analysis also. So with this you can see like for 1 year holding period, the average rolling return was around 19.76 percentage. Then its volatility was 13.52 percentage. And then you can also see its high return and low return. And also if you compare with the more longer rolling window time period, like let's say for 4 years time period, so here you can see its average total return was around 19.37 percentage. Then the volatility here has been decreased from 13 percentage to 4.49 percentage, and also the high and low rate. Similarly, here you can see. And then at the last, which is for drawdowns. So if you go here, here we are showing you the overall portfolio level drawdowns for the same. So if you want to check it on an overall portfolio level, here you can see it is showing you all the details. So like whether what was the loss percentage, what was the starting date for that specific drawdown, then you can see its start price, then its ending date, end price, and for the length, like for how many days the drawdown was occurring in this overall portfolio, and then the days to recover. So like it took around 171 days to recover from the specific drawdown and the recovery date for the same. And similarly, here you can also see the similar graph through which you are able to see all the gray shaded portion areas which are showing you the specific drawdown phase, and the white portion which is telling you about the recovery phase for this. So with this we have completed all this. And also if you again go back to the compare tab, and let's say in this main list we have also another option. So like let's say if you only want to view some specific columns, so what you can do, you can just go to this column views icon here, and here you can deselect. So like let's say if you only wanted to see the risk parameters, so I'm just deselecting some information. And from here you can also save your own specific column viewer. Like let's say if you only wanted to see some specific information, you can just deselect all of these tabs, and now you can just give it a simple name, like let's say risk parameters, and then you can just save it as a column view also, which you can later use also. Or let's say if you want to view any specific risk parameter column view, you can do the same also from here. So with this, we have completed all the tabs for the webinar. So if you have any questions, you can just unmute and you can ask this in.
Well, I have one question.
Yes, please go ahead.
Yeah, particularly if you open that portfolio page and the risk return tab.
Yes.
Yeah, over there. Yes. Now, if you select that particularly that briefcase type was looking, no,
Yes, for
another
the
one, previous, which tab I forgot. Okay, over here you said that the portfolio return was so and so, and the Nifty or the benchmark risk return was also shown, which is that screen.
yeah, this is the screen we are currently on, portfolio level risk versus return section.
Okay, okay. So the overall portfolio is shown in that red color, right?
Yes, that is correct.
Acha. So if you make that portfolio of all these funds included in the portfolio, then it comes into the high risk and high return category. Is that correct?
Yes, specifically for this portfolio, we are saying that basis the schemes, the portfolio happens to be in the high risk, high return quadrant.
Okay, okay. Which includes all these funds like HDFC, FlexiCap,
Right.
ICICI.
Yes.
Okay, okay. All right. Okay. I was just a bit confused over there. It's clear now.
Sure. No
Thanks,
problem.
thanks. Thank you, ma'am.
No problem. All right, there's a question in the chat box. How does one create a portfolio of schemes? So there are various ways how you can create a portfolio. Firstly, there's a CAS upload facility that we have on the platform. NSDL, CDSL, or CAMS. You can upload those files onto the system, and you will be able to run an analysis on the same. If not, you can also do an Excel upload as well. The fields that will be required would be ISINs as the first column and the percent, amount, or units or shares as the second column. And then you can run an analysis on the same. And the third way is the traditional way of creating a portfolio, manually keying in the name of the schemes. So right here in the portfolio section, if you kind of scroll up, there will be a plus icon available, and you can see, once you click on it, you can see add a fund, add a stock. The option is given. You simply search for the fund name that you want to be in the portfolio. Yes, now you simply search for it, click on it, and it gets added in, and accordingly you could give it an allocation of your own, and you can save the portfolio by clicking on create.
Can you clarify more on the variance I and variance uh, which you have told that two variance
You're talking about value at risk.
value at risk? There are two value at risk, na? So difference between the
Yes.
two.
Yes. So, two value at risk parameters that you can see is one is historical and the other is implied. Now, next to that, you can see 95 is also mentioned, which happens to be the confidence interval. So, talking firstly about historical VAR, it says that with a 95% confidence interval, there's a 5% chance, that is 100 minus 95, 5%. There's a 5% chance that if history was to repeat itself, the portfolio would go down by, sorry, the fund would go down by a negative 28, while the benchmark would go down by negative 32. And talking about implied VAR, everything remains same. The difference between historical and implied is the parameter that is taken for calculating. So historical VAR considers historical returns for the purpose of calculating VAR, and implied VAR considers historical volatility for the purpose of calculation.
I didn't got it implied. Again, can you please elaborate?
Sure. I mean, as I mentioned, implied VAR will consider the volatility as a parameter. whereas historical VAR was considering the historical returns, right? Implied VAR will consider historical volatility as a parameter for the same.
So implied will take care of this annual volatility with what you are saying 19.22. You mean to say, and historical means actual NAV.
Uh,
Uh,
yeah, hi, this is Arnab. So basically, both historical and implied are trying to calculate the same number, which is this loss has a 5% chance of happening, but the calculation methodology is different. With historical, it looks at all the daily returns that you have selected in this time period, and with that, using the daily returns only, it finds out which daily return is at the 5% percentile. So basically, this is a percentile calculation. So it's looking at returns only. Implied VAR, it actually takes care of the normal distribution. So it's basically looking at volatility, historical volatility, and using that to calculate your VAR. So you will see slightly different numbers in both cases. One is from returns, calculated from returns. The other one is calculated from volatility or standard deviation.
Okay, thank you.
Hello, can I ask one question?
yes, please go ahead.
Yeah, maybe, but the thing is, it's not related to exactly today's topic. It was about the portfolio. It was taken last time, and I have a small query on that. It was about the allocation in the portfolio. Yeah, is that possible to explain it right now, or it's okay, even if I can ask later on also?
I mean, what you can do is you can drop your contact number
All
in the
right.
chat box, so we
Yeah,
will reach out to you for the same.
sure. Thank you, thank you.
How can we do a review of an existing portfolio and can it be imported into the system?
Yes, that is possible. So, in our premium and pro version, we have a facility in the client section. Niketan, if you could go to the main page and show the client section once. Yeah. So, this is a facility wherein we integrate all your ARN registered client data onto the platform called as RTA connection facility. So all the clients under your direct ARN or your RIA code will get onboarded onto the platform. Onto the left, you will be able to see the client name. Just by clicking on the name of the client, you will be able to do a detailed portfolio analysis for the same. So this is more like an integration facility. Once you onboard, we set in certain filters and forwards on your registered mail ID to retrieve files from CAMs and CAR.
What if I don't want an integration and I just want an isolated review of an existing portfolio? Can that also be imported?
Um,
Something
yes.
like in Morningstar.
So in that case, what you can do is initially, as I mentioned, a tool called as Statement Analyzer that enables you to upload a CAS file either from NSDL, CDSL, or CAMS. That could be one way of onboarding this portfolio. If not, there's also an Excel upload facility. ISIN being the first field, and the second field could be either the corresponding percent or the corresponding amount or the respective units or shares.
Is that template available?
Yes, so right there in the portfolio section, if you go to the portfolio section and you click on the plus icon, there's this feature called as load ISINs from Excel. You click on it and we've given you samples as well right here. You can click onto it just to view what the samples are. This is the ISIN upload facility.
So this is it. We just need to upload this data. Nothing else, is it?
Yes, that is correct. you upload this data and then you can review the portfolio of that respective client.
While reviewing the portfolio, I have a question. When you run the improve, so in improve, you do not eliminate the scheme, you change the weightage. Is it possible by which we can tell the software to eliminate the scheme also if I wish? I do not want to change the only weightage.
So what you can do is, Niketan, if you can just close this screen, yeah, just run a portfolio. What you can do is, before you click on improve, just click on edit and save as that you see on top left. Right? You click on that option. Let's say we remove one scheme from this. Let's say I remove SBI liquid fund. You want to add something, you could do that. Right now I'm not adding anything. You just rescale it to 100, and all you need to do is do not update it. You simply click on run. Your original portfolio will be saved. If you want to update it, you could do that. Now you are running this portfolio which initially had 7 schemes. Now there are 6 schemes, and then you can improve the portfolio.
I wish to know from the engine only which scheme to eliminate. I am not saying I will eliminate. I want to say that when I run the improve button, it is giving the weightage to all the schemes. It changes the weightage. But is it possible that if it gives zero weightage also, if anything is any scheme is required to give a zero weightage? So it should improve not only by changing the percentage only, it is keeping all the scheme, whether it is for 2%, it is for 1%, or it is for 10%. If I wish that I want to reduce the number of scheme, I say that improve my portfolio by keeping only 3 schemes or 4 schemes. Will it be possible?
Hi, this is Arnab. So we cannot directly recommend this, but what we can do is point you to some things. So, for example, here you can see in this example portfolio, you can see the fund score, which is calculated by NGEN. It's an algorithmic score, so we don't have any input on it. It's a publicly disclosed algorithm, and so you can see couple of schemes are red, 3.4, 4.42. So those are obvious candidates for removal. But obviously it's up to you to remove them. That is one way. The other way is if you look at the Engine Pro section, there are some strategy templates, which basically, if you want to add better schemes, for example, you can go to the Pro section and you can see some example portfolios. Whoever's driving the screen, can you just go to the Pro section here? Yeah, so you can see portfolios here, and you can see, just open up the constitution, just click on that list here. Yeah, so for example, here you can see which funds have been automatically selected. These are automatically generated. So these are not recommendations. You're supposed to kind of take these and make these into your own using your own research. But we have some templates that are automatically generated using the engine fund scores that we have. So to remove, you can look at funds that have a low fund score. If you want to look for new funds to add, you can start the kind of research process over here if you want.
So how is this fund score calculated? Is it a 1-year return that you're looking at, or does it
We
have some?
look at a few different parameters. Can you just click on one of any fund, just any of these funds, and then open up that fund score pop-up. So we basically use three different things, 3 different time windows, 1 year, 3 year, and 5 year. And we calculate, 3 different scores. One is a score that's based on return only. The other one is risk, which looks at only standard deviation. And then engine fund score, which is the main one, which is what you were seeing before. That is calculated using risk divided by, return divided by risk. And then it's ranked within its own category.
What is the time horizon that you're taking into account? That's what my question
1,
is.
3, and 5 year, and they have 30% weightage each.
Okay. Got it.
Last time we had discussed approximately 2-3 months back, you was to give this download section in compare for the NGEN FS and the return score also. So it is still not coming. So is it going to come near future?
We will definitely check that out. I think that was released. If you go to the main list and compare, quick look. Yeah, just download. I think these fund scores do come in.
So they do come in, but in the daily NEV reports they come in. Right
Okay.
here, it's the fund score that comes up.
Fine. So we'll add that to the list. We'll get that done soon.
Daily NAV report means?
So we have a section called as funds. In that, there's an option called as reports. So when you go to this reports, these are daily NEV reports that you can download on your end. So this is an
Okay.
Excel file. So all the schemes that are there in the market will be available right here. If you click on a specific category, it redirects you to that respective category. So this is basis the daily NAV, what are the changes that have happened. Returns
Okay.
details will be there, risk related details will be there. There are multiple columns. The more you scroll towards the right, and towards the very end, you will come across the 3 scores.
Okay. Okay. So this is all equity funds you are saying?
This is across all the funds, be it debt, equity, hybrid. Every asset class fund will be there in this Excel file.
No, this sheet is only equity sheet you have opened.
Yeah,
So
right
you
now it
are,
is equity sheet. That is correct.
so in equity you will give the all the scores for the all equity schemes. Okay. And here it is easy number is written left side.
Sorry, I did not get you.
Did you written the ISIN number on left side also of the scheme? You are just writing the scheme name or left? Can you scroll left? So it is ISIN number is not written, and so I cannot connect with the details. Suppose I download, I cannot connect with. If you can download in the compare section, that will be more better. And here, if you can give the ISIN number also of the scheme.
Yeah, we can do both those things. We'll add those
Yes,
both
yes.
things.
Thank you,
No
sir.
problem.
So in the smart beta funds, if we are looking at the smart beta funds, I cannot see the DSP Nifty 50 equal weightage index. So that will be available in the under the index fund section, or will we be able to see it in the smart beta funds?
So this is an index fund, right, that you're referring to?
Yes.
Yeah. So if let's say we just go to the fund section, Niketan. Yeah, screener. If we click on the filter categories as an option. Um,
It's actually very confusing because it's an equal weightage Nifty index, right? So I don't
okay.
know where to look for it in the smart beta, or should I go to the index fund?
Okay, let's say we just select under equity index fund, we select equity index smart beta quality and value and low volatility and alpha. We'll just check once. Yeah. Could you repeat the name once again? DSP? Equal weights, right?
Equal weight, yeah.
Okay.
Nifty equal weight. Nifty 50 equal
Yes,
weight.
we can also filter it on an AMC level, Niketan, if you can just select filter AMC as an option. Yeah, the last one you see, DSP Nifty 50 equal
Yes.
weights index. It's coming up.
So basically, where do we look for it?
Yes, sure. Niketan, could you select the preset column view? We'll be able to know it comes under which section. Just select the preset column views, the drop down, and all set columns. Yes, so it is under Smart Equity Index Funds. Just a minute. Yeah, can you click on the fund name? Okay, it's low vol and alpha. So you can select this specific category from our screener section, and this will be available.
So this comes under smart beta or just pure play index fund? That was my question. Where do we look for it if we
So
go to a category level?
sure. So we have also introduced engine classification that way. Now, if you click on filter categories, it of course comes up under equity index fund. But we have also classified the equity index fund, and within that, we have classified it under low vol and alpha.
Low vol and alpha.
Right here.
But it doesn't specify in the nomenclature. So how can we basically
Yeah.
assume that?
Yeah, so basically the issue is the categories that you see inside equity index funds earlier they never existed. So we would end up with 253 funds in one SEBI category. So that was causing a lot of problems for users in terms of just going through the whole category. So a lot of people suggested that we should kind of create some automatically generated categories, which is what we've done. And what we've come up with is basically these categories, and sometimes if you feel it's not the right one, let us know, we can change it because this is completely under our control.
Yeah,
Everything
I
that you
don't
see
think
above it.
I would have even guessed that it would come under this
Fair enough.
category.
Fair enough. I think the first step to look for that fund, what I did while you was talking was right at the top, search funds. I just typed DSP equal. That search doesn't need to be, yeah. So you just type DSP equal and it'll show up.
No, that's fine. I do
Yeah.
understand that.
Mhm.
But when if I want to compare it with similar funds, where do I look? Because then I would go to the same peer group, same category and look for it. That was the thing.
Fair enough, fair enough. So I guess yeah, this needs constant updating with obviously feedback from our users. So we can, if you want, we can do a separate call. If you have some suggestions, we're more than happy to kind of take them into account and change the categorization if that's required.
No, I have absolutely no idea where it should come. That's
Right.
why I
Right.
asked you the same question. Yeah.
Yeah, I mean, so we've done kind of our best effort in terms of recategorizing all of the equity index funds. Same thing has happened to ETFs in equity as well. There's over 200 ETFs. Some are healthcare, some are mid cap, some are banking. So just go to filter categories again. Yeah, so you can see here, we've tried our best to reclassify them inside the ETF's equity bucket, which is the final level that SEBI has. So, obviously, with the equity index funds, maybe there is something that needs to change here. So we'll have a look and try to see if there's a different category it can fit in.
Sure, thanks.
No problem.
So in the multi-asset category also, do you have the asset mix over there? What is the ratio of the asset mix in multi-asset allocation funds?
Yeah, you can see that for every single fund. So any fund that you load, you just have a look at the asset allocation tab once you load the fund. So what you see here and all the other sub tabs, the same exact thing will be available for multi-asset funds as well, along with short derivatives, etc.
Okay, thanks. Thank you. And we also, it basically would show us the bandwidth also that equity, a few funds basically would invest within equity from 0 to 80. A few other funds may take it to a different level of equity. So I'm talking about that also, the bandwidth and the mandate where they can take, say, gold to 10% max. So even those are specified anywhere?
No, so whatever their mandates are defined by SEBI, that's not shown here. We basically show you
That'll
what we
be
show
a
you
good
here.
thing to
Fair
see,
enough, yeah.
actually, because in multi-asset, that is a very important factor that we look into, right?
Okay, yeah, we can check that out. So basically, you'd want to see within the category what are the actual mandates they've been given, the rules to stick to.
Yes, exactly.
Okay,
Because every multi-asset has a different mandate. I mean,
okay,
White
fair enough.
Oak may have a different mandate from ICICI.
Understood. Okay,
Yeah.
so we will try to
Sir,
see if we can get this data.
can you
Even
please take one multi-asset allocation fund and can we just check the uh, portfolio right now, just as an example?
Yeah, go ahead.
Asset allocation plan. Okay, in this, if they have gold or something, will it be reflecting over here?
Yeah, you can see
Gold, okay,
you know,
11.39%.
yeah,
Okay,
and you
okay.
can click on this and you'll see the individual exact holding
Okay,
name
okay.
also.
All right, all right, all right. So everything could be checked from here. Okay.
Yes.
in one more thing, in multi-asset, few of the funds are having long-term capital gain for 2 years, and few are having long-term capital gain of 1 year. So can we have some segregation in our engine to differentiate between the two?
So this is why
We'll,
I had put in that question about mandate, because we can see that mandate उससे पता चल जाता है कि
we'll check with our data provider if this information comes through our data provider, then it's a very easy thing for us to do. If it doesn't, then we will talk to them to try and source that data. But we will check.
Each scheme is having own seed. So if we can, the information is provided by the seed. So it is available, but the only thing is that the data provider should put in.
Fair enough. We'll check this out.
But yes, there
anything
are
around, sorry.
no. I was just appreciating a lot of details are available over here. A lot of data is there for us to also analyze. And that's nice of you. That was a very good session.
Thank you, sir. Thank you. We'll keep trying to look for this other stuff as well. We'll try and see if the SID is available, then we can,
No problem.
we can include it here, no problem.
No problem. Already there's a lot of data, and actually we can also go through it in details.
Yes, sir.
Yeah, sure. Thank you.
No problem.
So there is something around gold and silver. Oh, that will come under ETF or fund of fund, or how do we compare 2-3 gold funds, for instance?
Well, the best place to compare funds is the compare section. And you can put the compare section lets you put anything you want, funds, stocks, index, whatever you want in a list, and then save that list. You can load it up later. So you can easily add a gold fund in here, and there are columns for holdings, returns, etc. All of those columns are available, and obviously all the other tabs as well.
No,
So you can easily,
there's no separate category, right? Gold.
As far as I'm aware, I don't for gold funds, I don't think so. Let me think. I mean, the easiest way I've seen is actually go to the funds query section, and then basically create a query where the fund name contains gold.
And
Thankfully,
then how do we compare that? I mean, in case I just want to compare an SBI gold with maybe different, maybe
So for example, here we found 54 funds. Just show, let's see what it looks like. So what you can do is you can create a compare list using these funds, and then compare all of them. You can probably maybe take out ETF if you want using another query filter, and then you have all the gold funds in one place, and you use the compare button to take it to a compare list, and then you have that list saved.
Right. So I think this falls under the ETFs नहीं, ETF commodities and FOF domestic में आता है ये फिर. Shown in FOF domestic, right?
Yeah, I mean, there's ETF commodities I can see.
Okay, got it. Thank you. So I just wanted to know what the variance is all about. I'm still confused about that. What does it basically show us? What is it trying to tell us? What is that data trying to tell us?
Are you talking about VAR, value at risk?
Yes, exactly. Yeah.
Yeah, so that if you look at any, just let's go to any fund performance page. I think you have something open here. So this is based, so for example, if you look at the historical 95% VAR for the asset for this fund is 23.97 down. That's basically saying that there's a 5% chance of a 24% loss in the next, for 24% annual loss. 5% chance being, if you were to run history 100 times, 5 times out of 100, it will drop 24% or more. So, this gives you some level of confidence that I'm not going to lose 24% in 12 months because there's a very small chance, 5% chance of that happening. If you want to look at an even worse situation, you could, change that to 99. Yeah. And you can see it's become even worse. So there's a 1% chance that you could lose 50%. It's obviously very, very unlikely.
Okay.
But looking at the history, that's what it shows.
And the implied one?
Exactly same explanation. The method of calculation is just different. This assumes that the returns will follow a normal distribution, which in most cases they probably won't. And you can check that at the distribution tab. So if you go to the distribution tab now, so maybe change the number of intervals to 100 or maybe 1,000. I'm trying to get a better shape. So this will be near the normal distribution. So if you go back to fund performance, the implied VAR assumes that the returns will follow a normal distribution. And the basis of that, it says that there's a 5% chance that you could drop 28.57%. They're just different ways of calculating the same kind of number.
Okay. So I just want to know my last question. Sorry, I've just been
No problem.
bombarding you. So the cumulative return and the total simple return, what is, I mean, in case of an SIP, what do we look at? I mean,
well, with an SIP, it depends. Right? The SIP is just a method of investing into this fund. So if you want to look at the returns from an SIP, you would look at XIRR, which can be seen when you launch the SIP tool. But here, what it's showing you in terms of cumulative return is just the latest NAV on this chart on the blue line versus the first NAV. So it's a simple kind of return calculation with the start point and the end point. The total simple return is what is used in most kind of risk analysis. And what that does is it calculates the daily return for all of the days during this period and takes the average of that and then multiplies that by 260 or 252 to analyze it.
So this holds good for a lump sum, and I want to see where can I see an XIRR, because that's
for that you will you go to an SIP tool because XIRR would be on the basis of transactions. So obviously the return of the fund is completely independent from your investment methodology, which could be a lump sum or SIP or whatever it is. So just quickly launch an SIP tool so we can see it. So here you can see XIRR of NSIP of, this much from onto this fund for this period.
Okay, great. Thank you so much.
No problem.
If the session is over, can I leave the session? Is that fine?
Yes, sir, please. Yes, sir.
All right, all right. Thank you
Thank
so
you,
much
the
once again. Yeah,
No problem. No problem.
yeah.
thank you to the NGEN team for giving us so much informations. Thank you very much.
Thank you, sir. Thank you very much.
Correct, correct. Thanks all. Thanks.
Thank you. Guys, we can close now, I think.
Yeah. Bye.
So thank you all for joining, and you can also check our YouTube page, so where we have uploaded all the previous webinar recordings, and also the current webinar recording will be also uploaded by the next week. So thank you all for joining.